Coming soon, the Bank of Japan will be under new management. And the big question that everybody is asking is, will this be business as usual following the playbook of old, or will we be seeing a departure and some new monetary policy decisions being made? There are a few things to note. Number one, he has said that he has some ideas on how to exit the ultra easy policy. Basically, over the last couple of decades, the Bank of Japan has tried to stimulate inflation. So they've done things like money printing and keeping rates low and yield curve control, all in an attempt to stimulate inflation. But the situation in Japan has been very different than the situation in places like the United States, and it has resulted in almost a complete failure according to their own goals. One situation that has contributed to this has been their trade surplus. Typically, like in the United States, you would see a trade deficit, which means that in the United States, we buy a lot more things from other countries than we sell to other countries, meaning when you net out together, add it all up and subtract everything, we spend more money than we receive from buying and selling with all other countries. That's a trade deficit. In Japan, they've had the opposite for a very long time, a trade surplus. You can see by this chart, everything above the zero line, for decades, they ran trade surpluses. Now, recently, that has started to change. The second thing in Japan that hurt the central bank's ability to ease and cause inflation is that the private citizens and corporations in Japan for the last couple of decades, because of this trade surplus, they were able to deleverage. And so you had people increasing their savings and deleveraging, paying down debt. And so the net effect on the money supply in Japan was not one that would increase inflation to the extent that the central bank was hoping. But you can't outrun the consequences of mismanaging an economy for decades. And they have started to see the consequences of all this top-down control crop up recently. Number one, when you print a bunch of money in order to try and do something like cause inflation, there's going to be other consequences if that inflation never shows up. Those consequences are going to show up in other ways. Real quick, I want to let you guys know some information about my brand new options course. If you are not interested, just skip ahead with the chapter markers below. I'm launching a brand new options course. It is available for pre-order right now. The link in the description below. If you pre-order it, you will get as a bundle, a bonus added on my full portfolio allocation course. Once you pre-order, you will be guided to a page where you'll be able to get that portfolio allocation course as well. A couple of things you need to know about this. Number one, my options course is one of the most popular courses that I've ever sold. I created it a few years ago, and now I have completely revamped it. And so if you are one of the many who has already purchased my old options course, you will automatically be given access to this brand new one at no additional cost. Number two, I mentioned that if you pre-order this options course right now, then you will be able to get access to my portfolio allocation mastery course at no additional cost. It's a pre-order discount bundle that I'm offering right now. If you already have my portfolio allocation course, I'm going to be giving you a discount to get the options course instead, since you already have that. That link will be linked in the portfolio allocation curriculum. You'll find that underneath the options section. So again, if you are interested right now during pre-order only, order my options course and you will get access to my portfolio allocation course as well, absolutely free. One of those has been a disastrous decline in the value of the yen versus currencies like the dollar. Especially recently, during the year of 2022, we saw an epic decline in the value of the yen. Now, even this wasn't isolated. The reason why the yen was falling so fast is because they were having to print yen in order to engage in yield curve control. Because again, what you're trying to do here is keep rates low in order to stimulate spending. But in order to keep rates low, that means they have to be buying up all of that debt. And the only way they can buy up all of that government debt is by printing money to do that. And so they had the rate for the 10-year Japanese government bond set all the way down here in this band. And when they couldn't do that anymore, they let it rise. And now they've let it rise a little bit more to an upper band of 0.5%. It's like a giant game of Hydra monetary whack-a-mole where you hit one and three more pop up in unexpected places. And now you have more problems you have to deal with. And most of the time you're going to deal with that by just trying to print more money. And so they did have a little bit of a reprieve in the value of the yen by allowing the value of the bonds to fall and allowing that yield to go higher. But ultimately that is proving fatal as well, as the yen has been declining because they are still keeping the value of their debt at an unnaturally high price. But it's not like they are out of tricks. They do have one very large trick left in their bag. And that is shown in this chart by the Treasury of the United States, showing how many treasuries are held by Japan. And as of December 2022, they're the largest holder of treasuries and still the only one over $1 trillion. Because for all those years when they were running trade surpluses, they were buying up lots of US treasuries. And anytime the United States government needed to borrow money, Japan would be happy to lend it to them. But they're getting into some trouble now, and they have been liquidating these treasuries as time has gone on. Because if you keep on just printing yen and don't do anything else, you're going to destroy the value of your currency. And so they're meanwhile selling their assets, these treasuries, in order to buy back some of these yen that they've been throwing onto the market, and then using that to buy up the bonds to keep their yield curve control. And you see now what I mean by a whack-a-mole Hydra game of monetary policy. They used to have $1.3 trillion of US treasuries and slowly have been selling that down and will probably reach under $1 trillion soon. Which means for the meantime, it looks like it may be business as usual, even though we are getting a change in leadership at the Bank of Japan. He has not indicated any major changes are coming soon, probably because he knows they're in this giant mess of weeds. And if you turn one dial the other way that you've been going for the last 20 years, there's going to be other consequences that they're not prepared for yet. He's saying big improvements need to be made in Japan's trend inflation for the Bank of Japan to shift towards tightening. He suggested that an overhaul of their yield curve control is probably not going to come immediately, as he's saying if we were to do a review, we would spend plenty of time looking into it. So for now, it seems like business as usual will continue out of Bank of Japan, and any changes will likely be surprise and will not be communicated to the market beforehand, as they have indicated they do not want this change to be preceded by any players in the market trying to front run what the central bank will be doing. And yet again, just one more big difference between the way they do things over there and the way the Federal Reserve does things. As always, really appreciate you guys. Thanks so much for watching. Have a great day.